Hello, teachers. Welcome to Rep 5 presentations. So now let's have a look on our table of contents. So first, according to your request, we create a watch list of 10 company, and we're going to use fundamental analysis to have an overview on these company in the watch list. So first one is ACB, founded in 1993 with an initial target capital of 20 billion. ACB has grown significantly, and its company observance services like retail banking, over 384 branches and transaction office across 49 provinces. The company is catered to retail, consumer, SME, and large corporate. Retail lending account for 55% of its total loan portfolio as mid-2024. Despite a significant revenue growth, ATB is experiencing profitability challenges as indicated by declining ROS. This suggests that the rising operational costs are impacting the net profit margin. So next is the FPT Corporation is one of the leading technology and telecommunication company in Vietnam. So FPT expanded its operation into various sectors like telecommunication, IT service, education. It became publicly traded in 2006, listing its shares on the Ho Chi Minh Stock Exchange. And into 2023, FPT reported a revenue exceeding 50 trillion, marking a significant milestone in its growth. Despite a steady growth in net revenue, FPT is encountering profitability challenges as reflected in the declining net profit margin. So next is the Petro Vietnam, and uh, PB Gas has become a critical player in the energy sectors. The company's service include natural gases, transportation through pipelines, gas processing, and the sale of LPG. So at, as of 2023, PB Gas has a revenue exceeding 16 trillion, driven by a strong market presence in gas distribution processes. Despite its revenue growth, PetroVietnam Gas faced a profitability challenge due to declining net profit margin, also like others. So this is because the rising operational cost and is it impacting the overall profitability. The next one is high-end transport company. So uh, the frames has expanded to a lot of sectors like container transportations and shipping service. And this company publicly listed on the Ho Chi Minh Stock Exchange in 2016 under ticker HAS. So over the year, Haiyan has invested in container ship, sustainable practice, and digital transformation. This company experienced a strong growth from 2020 to 2022, but in 2023, saw a sharp decline in revenue and profit. Despite this, the company maintained a financial stability with rising equity through the decline in profitability ratios get a need for strategic improvement. So the next one is Huarfac. As over the year, as this is a really big company, and it had diversified into steel productions, which have become its core business. By 2007, the company has gone public and released on Ho Chi Minh Stock Exchange under the ticket HPG. So today it's the leader in Vietnam steel industry and continue to grow its presence in both domestic and international market. Hafak Group saw a strong growth in 2021 but faced a decline in revenue and profit in 2022 to 2023. Total asset and equity remains stable, but profitability ratio drops.
think next is about the SSI company. SSI founded in 1999 is a leading security firm in Vietnam with a revenue of 7.2 trillion VND in 2023. Its ownership structure comprised 49.03% domestic shareholders, 40.07% foreign shareholders, and 15.34% for major shareholders, with 0.81% in treasury share. Next is about the financial performance of SSAs. As you can see from the table, SSA financial performance peaked in 2021 but declined by 2023 with stable customer trends and high ROS above 30%. Equity and assets growth that ROEA and OOEA fell, signaling reduced profitability. Next is the SDK company is a prominent player in Vietnam's sensitive fiber industry with 45.61% of shareholder domestic shareholders and 23.83% of foreign shareholders. The company is known for its innovation and eco-friendly product with major clients like Nike and AGS. That is, as you can see from the table, the financial performance of SDK faced profitability challenges in 2023 with decline in revenue and raising debt, improving cost efficiencies, and financial management is crucial to reversing this trend. The next company is Vietcombank. It is established in 1963. Company stock performance bank in Vietnam. Its ownership structure includes around 30% for foreign shareholders and 17.75% domestic shareholders and 33.01% major domestic shareholders, reflecting a strong position in the banking sectors. And as we can see from the table, financial performance of Vietcombank showed a strong financial health with steady profit growth, expanding assets driven by customer loan, stable liabilities, and rising equity, and also consistent efficiency ratio. It highlights its robust operational performance. Also, about the VicCheck company, established in 2007, is recognized for affordable air travel across Asia. Its ownership consists of 27% major domestic shareholders and 12 foreign shareholders, and 35% for other foreign shareholders, indicating its growing influence in aviation. And the financial performance of VicCheck achieved strong revenue recovery and return to profitability in 2023. However, it should focus on improving cost efficiency and managing rising liability to ensure long-term stability. The last is the Vinamilk company. Established in 2007, is Vietnam's dairy industry with a 55% market share. The ownership structure includes 96.1% major domestic shareholders and 8.2% for foreign shareholders. We left a 5.7% for other foreign shareholders, underscoring its market dominance. And about its financial performance, MU maintained stable revenue from 2022 to 2023, but still faced a decline in profitability, particularly in 2022 with a partial recovery in 2023. The company's financial position remains strong, still with assets and equity.
So we'll move to the next part. It's about portfolio overview. We obtain data on the adjusted closing stock price of the companies GAS, ACB, HBG, HAH, and FPT as recorded by Yahoo Finance. In this case, it's important to note that due to the difficulty of acquiring information on the VN index, we utilize the VN 100 index on this one with information taken from the VN stock between the 20th of June 2022 and the 9th of December 2024. With regard to the research method, statistical analysis and data processing was performed in the Python. In the beginning, we used the construct of the portfolio of our assets by assigning equal proportions of 20% to each of them. The stock selection criteria, the fundamental analysis, evaluate its stock for a medium to long-term perspective, and technical analysis assess short-term stock performance for a chosen asset. So we'll move to the next part is technical view of stock.
First one is about the chart of moving average for ACB, show key buy and sell signal. The steady rise of the moving average and the alignments of the short and long-term trends suggest a stable upward trajectory. Both stocks demonstrate healthy growth patterns and signal that help identify optimal entry and exit point. The Bollinger Band chart reflects a mix of period of accumulations, breakout, and considerations. The steady widening of the band during key uptrend highlights increased volatility, while a flattening SMA toward the end suggests potential consolidations of a slower uptrend momentum. And the next one, we'll move to the return distribution of ACB. In 2018, ACB's return distribution was relatively symmetrical and close aligned with a normal distribution curve. This suggests that in 2018, with characteristic by moderate market movement with relative lower risk and volatility. By 2023, ACB return distribution exhibits increased variability compared to 2018. This shift reflects heightened risk in the market, require investors to adapt to a more volatile environment with potential for both significant gains and losses. Next one is about FPT. The first chart highlights a strong upward trend. This indicates a good time to enter the market, as our stock saw consistent growth throughout the year with only micro corrections along the way. And the next chart is so significant trend and price action. Toward the end of the chart, the sharp rise increase and the wider bands indicates increased volatility, requiring close monitoring for a positive trend reversal. And in the 2018, the return distributions of FPT showed a sharp and momentum peak. Factors contribute to this could include a stable macroeconomic environment, strong corporation fundamental. Such conditions make it reliable choice for a risk-averse investor seeking steady and predictable returns. In 2023, this shift could signify a change in market condition, while a lower peak densities and flatter curve reflect increased variability. Over-distribution suggests FPT maintain relative stability compared to other sets. And the next one is the chart show HPG, a strong upward trend in early 2024, followed by a corrections later in the year. By late 2024, the price movements stabilized, reflect a more neutral trend with reduced volatility. And the Bollinger Band chart serves as a powerful tool for traders, effective signal key trade opportunities during time of high volatility, such as in late 2023. White band on the chart indicates significant market movement. And in the 2018, the pattern suggests low volatility and a more predictable performance, with stability could reflect favorable macroeconomic conditions. Steady global energy price and solid company fundamental. And also by the 2033, this increased volatility may reflect global energy price fluctuations, macroeconomic uncertainties, or companies' specific challenges. Investors in 2023 face a riskier environment with a greater potential for both significant gains and losses. The Bollinger range of returns highlights heightened uncertainty, making the markets less predictable than 2018.
So for the moving average charts for HI.VN shows clear buy and sell signals. The blue around marks a strong buy point with upward momentum, while the red around indicates a sell signal before declines. The overall trend is bullish with weak recoveries after corrections. The Bollinger Band chart highlights an uptrend from 2023 to 2025. Price often held the upper band during bullish phases, with pullbacks creating buying opportunities. Narrow bands in early 2024 signal low volatility before breakout, while expanding bands in late 2024 reflect rapid growth with healthy corrections. Next, let's talk about the return distribution. In 2018, HIX.VN's return distribution was highly concentrated around 0%, with narrow spread between minus 0.05 and 0.05. The element with normal distribution and low volatility reflected a stable market environment, likely due to favorable conditions in the shipping industry. This made HAH.VN attractive to risk-averse investors seeking steady gains. By 2023, the distribution broadened with return ranging from minus 0.08 to 0.07. The flatter shape and deviations from normal curve suggest high volatility driven by macroeconomic uncertainties or industry-specific changes. The shape highlights a riskier market, offering both greater potential rewards and increased downside risk for investors. Next, let's talk about the chart. So, optimal trading points by signals occur when short-term moving average cross above longer ones, driving strong momentum. Sell signals with gradual declines indicate control corrections. These patterns highlight bullish opportunities and steady market trends. The Bollinger Bands chart signals key trends. Upper bands suggest overbought conditions, while lower bands indicate oversold levels. The expanding bands reflect volatility and contracting bands in a breakout. The 20-day XMA serves as dynamic support or resistance, showing market strengths or weaknesses. Next, in 2018, HBG.VN's return distribution was sharply concentrated around 0% daily return, showing stability in typical market conditions. However, long-term switching minus 6% to minus 2 to bonus 7% highlighted sensitivity to extreme market shocks, with deviations from normal behavior posing risks for stability-focused investor. By 2023, the distribution broadened with returns spread more evenly between minus 5% and plus 5%. Thinner tails indicated fewer extreme outcomes. A closer alignment with the normal curve suggested improved predictability. This shift reflects better market conditions, stronger risk management, and increased investor confidence in HBG.VN. And next one, let's talk about the Monte Carlo simulation. ACB.VN shows a 25.27% CAGR and 19.71 volatility. The expected ending price is 32 and 823.04 with top and bottom 10% at 4,638.9 and 25 138.64 respectively. The population mean of more than 31 is just minus 2.75% off, indicating strong growth potential with moderate risk. About the FBT.VN shows a 60.58% CAGR with more than 20%. The expected ending price is about 269,000 with a 10% chance of exceeding 351, more than and a 10% chance of falling below 193. The current price is closer to the bottom 10%, suggesting strong upside potential, but actual outcomes may vary due to market conditions. And next, the gas.VN has a CAGR of minus 4.073%, volatility up more than 18%. The expected ending price is 65, more than 65 with 10% chance of exceeding 81 and 10% chance of falling below 51,000. The current price is near the middle of the distribution. It can balance risk. However, investors should be cautious as future price may vary due to market conditions and unforeseen events. That's all. Let's move to the next part.
The price simulation for high-end suggests a 10% probability of the stock price reaching or exceeding around 113,000, while there's a 10% chance of it falling below around 52,000. The current price is positioned close to the bottom 10% percentile, indicating a higher probability of price appreciation. However, investors should exercise caution as the simulation is based on assumptions and historical data, and actual future prices might deviate due to market dynamics and also unforeseen events. The price simulation for Huafa Group suggests a 10% probability of the stock price reaching or exceeding around 50,000, as indicated by the red line marking the top 10 percentile. This implies potential for significant price appreciation, but also carries the risk of the price remaining below this level in 90% of the simulated scenarios. Investors should consider this information alongside other factors like the simulation time horizon, volatility assumptions, and the overall distribution of simulated prices before making investment decisions. For the first period is from 2018 to 2024. Over the longer period, GAS consistently demonstrated the strongest price growth when maintaining its position as the top performer. However, the overall trend was more gradual compared to the shorter period, signaling steady but slower progress for most stocks. And for the second period is from 2023 to 2024. The period saw notable price appreciation with GAS and FPT leading the market. The growth trajectory during this time was steeper, indicating rapid stock value increase and heightened investor optimism. This acceleration reflects strong company-specific performances and also favorable market sentiments. And the key takeaway is GAS consistent outperformance across both periods highlight its robust market position in effective strategies. The accelerated growth in the recent period suggests a favorable combination of internal factors and broader economic dynamics, emphasizing the importance of timing and market conditions in stock performance analysis. And now is for daily return. For the first period is from 2018 to 2024. All five stocks experienced notable volatility, with frequent spikes in daily return. Huafa Group stood out for its pronounced price swings, reflecting the highest volatility over the long term. And for the second period is from 2023 to 2024. GAS and Haier show the highest daily return volatility, indicating that the larger and more frequent price swings. In contrast, FPT and Huafa Group were more stable with steadier price movements. And the key takeaway here is volatility highlights varying risk level among stocks. In the shorter period, investors seeking stability might prefer FPT and also Huafa Group, while higher volatility in other stocks signals greater potential risk and reward. And next is for log returns. The first period is from 2018 to 2024. All five stocks had a significant log return volatility, with frequent spikes indicating sharp percentages changes. Huafa Group stood out for its pronounced swing and also frequent fluctuations. In the next is for the period from 2023 to 2024. GAS and Haier show the highest log return volatility, with frequent and large percentage price changes. Meanwhile, FPT and Huafa Group were more stable with steadier percentage movements. And the key takeaway is log return volatility reflects varying risk levels. For lower risk, investors might favor stable options like FPT and Huafa Group in the shorter period. And for cumulative returns, for the first period, GAS VN remained the top performer, with Huafa Group and FPT also showing strong long-term growth. And for the second period, GAS and FPT delivered the highest cumulative returns, with GAS showing the steepest growth. And the key takeaways is GAS consistently led in cumulative returns. Highlighting its strong performance, the result emphasized the potential for significant growth while underlining the need for thoughtful stock selection.
My part focuses on optimizing a portfolio of Vietnamese stocks using Macrowick Portfolio Optimization Framework, also known as Modern Portfolio Theory, and let's explore how this theory guided our approach to maximize returns and manage risk effectively. Our portfolio consists of 5 Vietnamese stocks as presented before, and these stocks represent a diverse range of sectors, providing a well-rounded view of market dynamics. Our primary goal was to evaluate these asset risk-return characteristics and optimize the portfolio's performance based on our findings. We began by analyzing the return distribution for these stocks. Except GAS, other stocks show positive skewness, indicating potential for above-average returns. Meanwhile, GAS exhibited negative skewness, which could imply higher downside risks. The Curtis values, representing the likelihood of extreme return events, further highlighted its stock's risk profile. These statistical insights form the basis for our portfolio analysis. This analysis gave us an initial idea of the risk each stock carries. Our initial portfolio was equally weighted, allocating 20% to each stock. Key metrics include expected return, volatility, value at risk, shape ratio, and Shortino ratio. At this point, we implemented Macrowick's portfolio optimization, a key element of modern portfolio theory. This approach focuses on maximizing portfolio returns for a given level of risk or minimizing risk for a desired return. It uses expected returns, covariance, and correlation metrics to determine optimal asset weights. This allows us to construct portfolios on the efficient frontier, which represent the set of optimal portfolios for varying risk levels. For example, GAS had lower correlation with other stocks, making it instrumental in reducing portfolio risk. On the other hand, stocks like ACB and FPT show high positive correlation, which means their risk and returns are closely linked. Balancing these relationships allows us to enhance portfolio efficiencies. Using the Markowitz framework, we plotted the efficient frontier, highlighting 4 key portfolios. The first portfolio is that minimum volatility portfolios. The second portfolio is to maximize shape ratio portfolio. And we also construct our example portfolio of target return of 12% and target volatility of 20%. That is portfolio number 3 and portfolio number 4. And to validate our results, we conducted Monte Carlo simulations with 50,000 trials. This analysis tested the robustness of our optimized portfolios across various market conditions. It confirmed that the maximum shape ratio portfolio consistently provided the best risk-adjusted return, making it an ideal choice for investors aiming to balance risk and rewards. And about the returns. In conclusion, Macrowick Portfolio Optimization Framework guide us to analyze and enable us to achieve significant improvements in portfolio performance. It highlighted the value of diversification, data-driven decision making, and efficient resource allocation. And thank you for your attention. I am happy to address any questions you may have.